Well, good morning, everyone. Welcome to our trading room. All right, get the screen share going on. All right, this morning I thought I would take a few moments and go over the charts and the settings. The reason being, I've gotten some emails from folks. They're a little bit confused what's going on in the trading room. But at the same time, people, please, if you're in the trading room and you have questions, just ask. That's why we're here, or that's why I'm here. I know how to use these things. If you don't know how to use them, then you have to ask me. And it is much easier from my point of view to show you something here on a video rather than have to sit down and dig up materials and write this whole long email in response to your question. Okay, so I'll go over the settings really quick, and then we're going to take a few moments and we're going to go over the signals. So if you're looking for some trade suggestions today, it's probably not going to be the best day for that. Just looking at the daily chart before we get into this, you can see a big rejection yesterday as we got near the 8,000 level. I think it's reasonable to assume we're probably going to, eyeballing this, looks like we may get down somewhere around 7,800. Volume up on yesterday's bar, which suggests a little bit more participation perhaps to the short side. Okay, with that said, a quick overview. Here on the top left is the Hawk Scalper. Top right, Falcon Swing Trader. Bottom left, Eagle Trend Trader. Those are the DTS birds, the Diversified Trading System. That's where it all began. And from there, we mushed them all together and poof, out came the Raptor trading system, which is a hybrid. It contains elements of the Hawk, the Falcon, and the Eagle all in one trading platform. What are the advantages and disadvantages? Well, the three DTS tools, one is developed for each trade environment. So if the market is perhaps a little choppier, then you're going to get more signals off of the Hawk Scalper and perhaps the Falcon Swing Trader. If the market is more in trend mode, well, then the Eagle Trend Trader is probably going to come into play more often. So this is kind of like a, well, I don't want to use microscopic, but it's a more detailed view of the market using these tools here. The Raptor, the one you see me use most often, and that's because there's probably more Raptor traders in the room than not, it's a one screen system. So it's fairly easy to monitor what's going on, especially if you're following several markets. By and large, the signals are duplicated on the Raptor that you'll see on the other three 99% of the time. Occasionally one signal will develop that isn't reflected in the Raptor, but you know, those are usually those are usually nothing really too serious. Okay, settings wise, here in the Hawk Scalper, my settings for most markets are the defaults. Problem is, a lot of people don't adjust their brick size. I think by default, NinjaTrader loads a 5-tick brick, but that's not what we're using. With the Hawk, we're using a 6-tick brick, and if you're using the Ninja 8 version of the mean wrinkle bars, you can see you have the ability to adjust the trend, that's the body size, and the reversal of the bar. That's the wick or tail size. But the default is still 6, so it's a 6 by 6 brick. If you're running a 5-tick brick, then of course your signals are going to look a little bit different than mine. Is a 5-tick brick better or worse? Really, not necessarily. 1 tick is probably not going to make that much of a difference. You're going to produce a few more signals. The important thing is to remain vigilant with the signals and, to trade your chart. Listen, folks, if there was only one way to make money trading, everybody would know it, everybody would be doing it, and the market would figure it out in a couple of days, and then everybody's system would be worthless again. Here are your basic hawk signals. These are the 5 signals that we concentrate on. And out of these 5, I really concentrate on just these 4. This is what we call a cheat sheet. If you don't have it, you can write me. It's also uploaded in the members area. And this will show you your hawk signals. So first and foremost, the first micro-macro crossover signal. Muy importante. This is a very strong signal. It has a huge success rate. It's one of these signals you can almost take without thinking about it. Although, not a bad idea to, consult what trend or lack thereof the market may be experiencing. It occurs when your micro line, that's the thin line, crosses the macro line, that's the thick line. And it's the first signal. Notice everything is in sync. We have green bars, green trend lines, green filter, and of course a green signal. The macro pullback tends to occur when the market pulls back to the macro line, hence the name. Notice everything stays in sync except the micro line. The micro line goes out of sync. Very strong signal again. You typically only get 2 macro pullbacks within a reasonable trend. Here was one, here was the other. This one is labeled a post 4-arrow consolidation, but it's also a macro pullback signal. Everything is in sync except the micro line. You produce the signal, boom, up you go. It's just your basic pullback signal. Then we have the 4-arrow consolidation. This is when the pullback sometimes becomes a little deeper or a little sloppier. The market is consolidating, it's thinking about whether or not it wants to continue with the trend, and it will typically produce 4 signals before it rallies, and it will tend to rally on that 4th signal. This signal is so strong, it's the only signal I will take on the hawk if there is a yellow bar involved. Typically, I avoid the hawk if there are yellow bars. Then we have the next signal after the consolidation, which is kind of the last gasp for the market. And then we have the red bar buy and green bar sell. And these are really the last gasp on the market. So much so that it is a signal, pardon me, that you can actually take counter trend. And by that, I mean it's a buy signal, but you could look to place an order to short below the low of the signal in case the signal fails. In a downtrend, it would be the opposite. You would get the green bar, but you would get a sell signal. Now, typically what happens, this is actually a very nice example of how a failure falls off very, very sharply. But typically what happens is when that signal fails, it eventually would develop into a first micro-macro cross lower. All right. So there's a very quick overview of your hawk signals and your hawk settings. So here you can see first micro-macro cross, boom, up she goes, no problem. Now we're getting a bit of a consolidation. So this is either going to turn into a macro pullback or a 4-arrow consolidation. All right, we got 2 signals printing already. There's your hawk review. Now to the falcon. The falcon, once again, if your falcon does not look like my falcon, chances are very good you're running a 5-tick brick, which would be the default for NinjaTrader. But the default size for the falcon is 8 ticks. So again, if you're using the Ninja 7 version, you only have to plug in 8 ticks. If you're using the Ninja 8 version of the mean Renko bars, it's going to be 8 by 8. Falcon signals, we have 3. And this is your Falcon cheat sheet. The trend change signal. So your trend line changes color. It's the first in sync signal after the trend changes. Typically this, I couldn't find a better example. Typically this develops a little bit earlier. You're going to kind of get a feel for it. It will tend to develop somewhere in here. You can actually see a couple of bars tried to develop it. And what typically happens is you see the move that changes the trend line. Then you see the counter move trying to recover the earlier trend. And then you get the new trend emerging and the market saying, nope, we're okay. We're gonna take off in the new trend direction. So there's your first in sync signal. A very solid signal. Then we get to the late filter entry signal. This is a license to print money, this one, especially when the trend line goes nice and flat. The trend line does not change color. The filter changes color or goes out of sync, comes back into sync. That's the important part there. It has to come back into sync. And once it comes back into sync, you have to produce a signal. And that is your late filter entry signal. And after that, you just get your basic trend line touch signal. You're going to find that any signal that develops away from the trend line will have a tendency to drift back to the trend line. So you may want to wait for just your basic trend line touch signal. Those are your 3 basic Falcon signals. So, well, here we had the trend change signal. It came a little bit late. Once again, you can see there were some bars right here that were trying to produce a signal. See, this is a little bit more in line. So the trend changes. You get your up push, you get your down push. Oops, sorry. You get your up push, you get your down push, and then you get your first in sync signal. So we've got green bars, green trend line, green filter, and nice follow through. You can see here, late filter entry signal. And you're going to find with the late filter entry signals, when the trend line goes nice and flat, that's a very good cue. And then we're followed with another late filter entry signal and a trend line touch signal. A word of warning, these signals do not operate in a vacuum. So if you get late filter entry signal after late filter entry signal after late filter entry signal, by that third signal, I would start to get a little suspicious, a little bit leery. Because don't forget what this filter is showing you. This filter is a momentum filter. It shows you who has the more momentum, the buyers or the sellers. So when we dip enough to change the filter, momentum-wise, that shows you that, hey, the buyers are starting to lose their grip. But typically what happens when that occurs is the buyers all of a sudden wake up and say, uh-oh, we got to take control of the market. So if the sellers in this case can, push the market down, change the momentum, okay, buyers take it back, oh, sellers are back again. If that happens 2 or 3 or 4 times, certainly that third and fourth time, I'm going to become very, very suspicious of whether or not we can still take the market higher. And then here this morning out of the gate, the trend change signal came late. It looked like we had a little bit of early momentum there. And but it followed through, and here again we follow up with a late filter entry signal, and that too looks like it reached its profit objective. Okay, so those are your Falcon signals. The Eagle, good old Eagle. Once again, if your Eagle does not look like mine, it's probably because your brick size is off. And feel free to experiment with the brick sizes. This is why we've, on the Ninja 8 version, why we've made it more tweakable so that you can adjust it to your risk tolerances. But the default is a 12-tick brick. So Ninja 7, enter 12 ticks in your data. Ninja 8 is going to be a 12 by 12. Now, the Eagle, here's the cheat sheet, which I never got around to putting the signals on, but it's still good enough to show you the signals. Your basic trend change signal occurs when your trading band changes direction, there's a pullback, and you get your first signal. This is very similar to what we look at in the Raptor. That's actually how the trend change signal on the Raptor developed. Excuse me. Sorry, I had to get a drink of water. Okay, so your trading band changes direction. There's a pullback. It's the first signal in the new direction. Clouds change direction. There's a pullback. There's your first signal in the new direction. That signal will tend to have a decent amount of follow through. Notice that this signal here, developing a little bit earlier, is a little bit more desirable than this one. Not that this one, the market did not continue lower from here, but note that the added momentum means that your stop placement is going to be a little bit trickier, right? This is not the kind of trade you want to enter here and you want to place your stop right here. Well, although it would have worked out. But as you go through your charts, as you find these signals for yourself, which I highly recommend, by the way, that's how you're going to get good at spotting them. Then you'll subconsciously even recognize which signal is stronger, which signal is better. After this, we have your, in the case of an uptrend, we have your red bar buy. So it occurs when the market comes back to the hard edge. Remember, when the market encounters the hard edge, we anticipate some sort of reaction. We don't always know if it's going to be a big reaction, but we know it's going to be a reaction. Market comes back to the hard edge. We still have red bars, but we're producing a buy signal. That's your red bar buy. And here on the downtrend, you have your green bar sell. So again, you can kind of see the momentum, how much faster the market was coming down here versus the trend change on this side, and the degree of follow through on each of these signals. You didn't reach your profit target here, but at least you had an opportunity to get the trade to break even. And here you've got a decent green bar sell, and it looks like we've got a decent amount of follow through on that. What I tend to do too sometimes with these signals, if opportunity allows, is I will draw a trend line here and just kind of use that as a little bit of a confirmation for the breakout. But this is a perfect example of a rule of three counter trend signal. This is your counter trend signal on the Eagle. It occurs when you have a trend, but all of a sudden you start producing signals against the trend. There's two components to a rule of three signal. And so long as those two components are met, it doesn't matter whether you have three counter trend signals or two or four. If you start to get 5 or 6, then I would seriously suspect that the market is in a sideways drift, and I would scrub any attempt to buy it or sell it. But first and foremost, you have to have a trend, and then secondly, you have to have a test of the extreme. So in this case, the extreme is this high. You have a retest. The market fails and produces yet another counter trend signal. At this point, I would consider, okay, I've got a rule of three signal. If the market starts to head lower, I'll probably short it below here, because I wouldn't short it off the second signal, only because sometimes the market will recover. But after that second signal, I would already have an order to short below here. In this case, the market goes up one more time, gives us yet another test of the extreme, another failure, and we come back with that third counter trend signal. At this point, we can start to get a little bit more aggressive, and you can see what happened. And that is because, try to read this like a book if you can. Ask yourself, what's going on? Okay, we had a trend change. The market goes up. Okay, we have a pullback as the sellers beat up on the buyers. That's okay. The buyers recovered off the hard edge. It goes up, but wait. The buyers can't get above the previous high. That means the sellers are knocking them down. So the market comes down. Okay, the buyers recover. They try one more time, and they can't do it. In the markets, things tend to happen in threes. So if you see 3 rally attempts and the market can't hold it, it's probably going to go the other direction. So there was rally 1, there's rally 2, there's rally 3, and then we get that rule of 3 signal just confirming what we're looking at. And then the market starts to go the other way. Now, don't be too frustrated with yourself if you don't see all those things just yet. It does take a little bit of time to learn the signals. But here you can see, well, this is kind of pre-market, but even so, note the trend change, right? With cloud changes direction, comes up here, we get the signal. It does not reach our, well, not yet, doesn't reach our profit objective. Again, it depends on your stop placement. But the market drifts back, gives us a red bar buy. Okay, did not fill. Gives us another red bar buy. Notice it's okay for prices to go under so long as the band does not change direction. So we come back with another red bar buy, and boom, very nice follow through from that. See if I can find, and like I said, I strongly recommend you go through your charts and see if you can identify these for yourself. There's a nice little green bar sell with exceptional follow through. Another green bar sell, great follow through. See if we can find, oh wow, you got a lot of green bar sells here, all of which had really good follow through. I'm looking to see if the reversal was a rule of 3. Well, we got the 2. We got the 2 signals. Now this is a test of the extreme that did not look like the other because it actually went a few ticks higher. Do not micromanage your trade analysis. What is this telling you? Yes, it went higher than this high, but what is this telling you? It's telling you, okay, we went higher, but we're not going higher anymore. So after I get this second signal, counter trend, I'm going to be open to the idea that the market's probably going to come up, retest one more time. It's going to come down here. I'm going to have my third signal to short, and then I have my rule of three. 1, 2, 3 signals. Now, as it happens, the fall off was a little bit more abrupt than that. I didn't get my second chance. Oh, I suppose right here, I had my second chance to get in. But this is where you want to get yourself. You want to get yourself to the position where you can say, okay, tested the extreme, the market broke higher, but it's not going higher. And all of a sudden I printed another signal to short. I wonder if the market's getting ready to go the other way. It looks like the buyers are losing their grip. It's okay to talk to yourself when you're trading. Just close the office door so your significant other doesn't think you're losing it. Okay, last but certainly not the least, we got the Raptor. Once again, if your Raptor does not look like my Raptor, it's probably because your brick size is different. The default brick size for the Raptor is 8 bricks. And that is because the Falcon is the primary bones for the Raptor system. So it has a lot of similarities with the Falcon, but of course it incorporates elements of the Hawk and Eagle as well. As far as the Raptor settings themselves, so we'll go to the indicator window now. Where are you, Raptor? Oh, for some reason I have 2 Raptors on mine. Okay, doesn't matter. Cloud sizes are all the defaults. You can play with them if you want, but it looks like Ben got a little creative here and he made the reversal, the wick size 10 and the trend size 12. You could just change it to 12 and 12. On Cloud 2, we have 6 and 8. You could just change it to 8 and 8. Those are your Ninja 7 defaults. And then your Hawk brick is 4 and 6. Once again, you can just change it to 6 and 6, which would be your Ninja 7 version. The signal parameters, HE, that stands for hard edge. You can turn on the trend confirmation if you want. All that means is that everything has to be the same. And the signal parameters, SE, that's your number 2 signal. That's soft edge. Again, I go with the defaults. If you want to make it more sensitive, if you want to include more number 2 signals, increase that number. 0.125 is a nice number. Minimum bar retest, if you want to increase the number of signals, decrease that number. The Hawk, or pardon me, the Raptor has the added advantage of showing the high probability signals for you. So you actually don't even need to memorize the signals. There's 3 main signals that we go with. The cloud crossover signal. So the clouds change direction. They were bearish down here. They're bullish now. It is preceded by a little bit of a pullback. Sometimes the pullback is big. Sometimes, as in this case, is only a couple of bars. It's just like the eagle. So it's just like that first signal on the eagle. That's your cloud crossover signal. Sometimes in the trading room, you'll see me do what I call the early cloud crossover because the clouds are almost fully crossed and I'm anticipating a signal to print. So I would be on the alert for an early cloud crossover signal. I'm going to skip the number 2 signal here for a moment and go with the number 3 signal, which is the continuation signal. And in order to have a signal to continue, you first have to have a trend, right? If there's no trend preceding it, you're not going to have a trend continue. So your number 3 signal will develop when the market is trending and pulls back to the hard edge, either the fast hard edge, that's this line right here, or the slower hard edge, and then tries to resume the trend. If you suspect the trend is in jeopardy, why would you say that? Well, we had a nice rally here, a little bit of a pullback, a nice rally, and all of a sudden we're pulling back, and we come up with yet another number 3 signal. You don't have to take the signal right on the hash mark. And because I always encourage you to have a trade quota on the day, a very low trade quota of maybe 1, 2, or maybe even 3 trades, you don't have to chase every signal. So if you're looking at the signal and you're not quite sure, well, your options are you just pass on the signal entirely, or you look to enter up here, or you look for a second push opportunity, which would occur right here. And now you can set up to buy the market if it continues to rally at that point. So the number 3 signal, you can follow it blindly, but sometimes viewer discretion is advised. The number 2 signal is your counter trend signal. And as with the number 3 signal, the number 2 signal, if you're going to be counter trend, well, first you have to have a trend to counter, right? So to the left of the chart, there needs to be something resembling a trend. And just as with that rule of 3 signal on the eagle, you must have a test of the extreme. There must be evidence that the market can no longer continue with the original trend, and that's when you're going to produce a counter trend signal. That's why I would probably not pay that much attention to this counter trend signal right here. It developed rather quickly. You're going to notice that your counter trend signals are going to develop after pullbacks. You've heard me refer to the 232 signal. And remember, the number 3 signal only occurs on a pullback. So the 232, you get a signal to sell, then you get a signal to buy, and then you get a signal to sell. That second sell signal will have a tendency to be a little more reliable. And if you think about it, it makes sense. You could have counted this. We have the background highlight here for a sell as well. But think about what's going on. You have a trend, or you're supposed to have a trend. And all of a sudden you're producing, the system is producing a signal to sell. So the trend may not be quite as strong as you thought. Okay, trend continues higher. You get a pullback, and now you get the continuation signal. And shortly after that, you get another signal to sell. So that pretty much tells you that the buyers are losing their grip. And the target for the number 2 signal is always the hard edge, usually the lower hard edge of the trading band. The trading signal, or the counter trend signal, is also more viable as your band becomes broader. Typically, anything over 50 ticks, you can get a little suspect. Certainly, if we're pushing 70 and sometimes 80 ticks, and you produce a number 2 signal, go for it, because it's probably going to reverse. And that's it. There's your overview. So make a note of today's date, October 23rd, and you can find this video at our YouTube channel, and you can review it to your heart's content. But like I said, by and large, if your signals differ from mine, if your charts look different from mine, it's probably your brick size. You're probably running a 5 brick chart. All right, well, we had a little bit of a sideways skid. Not a bad thing because, well, now we can identify a trading range. We can actually wait for the market to break out. Here's something interesting though. It looks like we've had a trend come in before we had this trading range. So chances are always stronger the market will try to resume the trend. So you could throw your just in case order to buy, waiting for the market to resume trend. I would not place a just in case order to sell just yet. Ideally, I would like to see the breakout, the retest, and then look for a chance to short. Sure. Aspen says on a nice cold winter day, which we don't have here on the West Coast, but I get your point. Can you please make a note on a chart as you have for the Eagle and Hawk? It would help us. Of course I can do that. Now, if you were still in grade school, guess what your homework assignment would be? There you go, folks. Annotate a Raptor chart, explain the signals. You can send it to me for grading if you want. I'm sure I have a gold star here somewhere. Okay, it looks like we're going to try to break the bottom end now. You've probably heard it said that if you want to learn something, explain it to somebody else, or something to that effect. And there's a lot of truth to it. If you can explain something to someone else, then you probably have a grasp of it. So, you know, if you're inclined, take a few moments and describe a number 1 signal, describe a number 3 signal, describe a number 2 signal. It really, honestly, it does not take that long. You can see they're pretty straightforward. All right, we're going to work an early trend change signal here. Yeah, way to go. Aspen says, I did that already for clarification. I have it on my desk to remind me. And of course, you're going to become more familiar with your tools as you use them. I hate to tell you, but there is a little bit of chart time involved. But that's the fun part. Okay, I noticed the Falcon already has a trend change signal going on right here. The Raptor did give the early number 1 signal right here. I'm looking for a little bit of a pushback so I can get short. Come on, you guys, give me a little bit of a bump. Just so I know where to short from. Because the buyers, they may be playing possum. They may let the the breakout occur knowing that, hey, everybody's going to pile on the breakout, and then boom, they drive the market higher and stop everybody out. They wouldn't do that, you say? Yes, of course they would. You read some of these stories about the market makers and stuff, and makes you wonder why anybody would invest money in the stock market. Where's my this is one of my favorites. There you go. Wall Street gang signs. Well, we got a little bit of a pushback, not as much as I was hoping. Well, I wonder, is that all we're going to get? See, where's all that buying momentum now? We're just so quiet. All right, we'll throw a just in case order to short down here. See this, all this mess here in the hawk? This is no longer a 4-arrow consolidation. It's just gone on too long. We have sell signal after sell signal after sell signal after sell signal, no follow through. So while the market may well continue lower from here, this is not a 4-arrow consolidation anymore. All right. So you can see that coincided here now with the number 1 signal, as well as the Falcon signal that we had. Okay, first order of business, get a stop in play. And now let's set a profit target. So I'm in at 65.5, and I would like a 5-point profit. Darn, did I miss my chance to get the trade to break even? Okay, so at this point, I will get the trade down to break even. This is kind of the last attempt for the sellers. The market's just so darn slow here this morning. Yeah, we're not seeing much follow through, and I really didn't want to give it that much more room. So, not much momentum to the downside. We keep trying, but there's no follow through. Bollinger Suite is starting to get a little bit bullish here, and they're now a potential number 2 signal. Now, it's only visually a number 2 signal. It's not printing as a number 2 signal, but I'm going to treat this recent low here as a retest, a test of the extreme. Great question here from Aspen. Aspen asks, Eric, I take 2 contracts, one to cash in at 100 and another to trail with, another to trail with a runner. Wish we could separate the stops at different levels. Any suggestions? Yes, sir. I will show you how to do that here in a moment. So let's get 2 contracts in. Well, it's just going to be, are you using Ninja 7 or Ninja 8, Aspen? If you're using Ninja 8, you can see it's pretty straightforward. You can set 2 orders, 2 stop losses, and only 1 profit target. If you're using the trade manager on Ninja 7, you can preset your profit targets. So you can set that you want you only want to take profit at for a single contract by altering the percentages. Oh, I see. Aspen says, I enter with 2 contracts and it sets stops at 1 price. Can I separate them? The easiest way to do it is to manually delete your stop and manually enter the stops where you want them. That's the easiest way to do it. All right, well, there's the number 2 signal. We made it back to the hard edge. I'm trying to squeak a couple dollars out of this, but it's not being very cooperative right now. Come on. So what we're going to see now is a test of the extreme and a proper number 2 signal. I can bring those up a little bit. The number 3 signal. Nuts. All right. Let's see now. Really, the last chance for the sellers here. I will give it a couple of ticks extra because sometimes the market will breach the low by a tick or 2 only to recover. Well, it looks like maybe there was a trend there after all. Shoot, they owe me a pullback, but I don't think I'm not going to get it. All right, well, I tried to show you how you could do a runner on that, but I just got a little bit ahead of myself. Waiting for that proper number 2 signal. Like I said, I kind of got a little bit ahead of myself. Ah, look at that. Now this probably didn't print as a number 2 because it's probably just a little bit too far removed from here. Wow, where's my pushback? Okay, so it looks like we're going to get an early trend change signal now. So we can anticipate the clouds to cross. Yes, sorry, Aspen, I didn't see your question there earlier. You can add orders to your chart by right-clicking on your mouse. and you can select orders. You just need to remember when you use these orders, they are live the moment you put them on your chart. So it's to your advantage to set them and then bring them in to where you want them to be, rather than try to throw an order in right there, because you see what can happen is all of a sudden you get filled, and that may not be what you were after. All right. The market seems quite content retracing its steps here this morning. It's going to be a very pleasant day here in the Pacific Northwest. After a couple of weeks of rain. But that's okay, nobody's complaining. It was a pretty dry summer, so the rain is very welcome. I think, no, okay, I was going to suggest we put a just in case order to short down here. You know, there comes a point where you can see too many things in a chart. Although we did have a breakout, this is the second leg lower. Thing with trading, you're never going to have all the pieces to the puzzle. All you can do is make your best estimation of what is going on, and then structuring your trade to take advantage of the market if it does what you think it's going to do. I don't think we're going to get another trade in here. I am going to close up the trading room here shortly. Now we're just kind of going back and forth. Next signal that prints here on the Raptor will be a number one signal. We've got the trend change signal here on the Falcon already, and a first micro macro cross on the Hawk. Oh, here we go. We got ourselves just your basic run-of-the-mill with trend signal on the Eagle, your discretionary signal. I'll set profit targets. Okay, we're in. So first order of business, set your stop loss. So I'm in at 59. I want out at 55. We'll manage this here from the Raptor because I already have everything set up. Odd, the Raptor has not printed that number one signal yet, in that we have a trend change signal here on the Falcon. So one of those examples of how the tools are in sync, but every once in a while, one of the signals will slip past you. There we go. There's the number one signal. Just a couple bars late. Oh, okay. Paul here. He said, what I saw at 722 was a zero line rejection. That's the zero line right there. And then a Bollinger divergence. So divergence, of course, occurring when your indicator does one thing, but your price charts do another. So I think what Paul may be referring to is this type of deal. Where your Bollingers are heading higher, but your price is heading lower. In which case we have another one right here. We have a mini one. We have price going lower. Well, Bollinger is moderately lower. Doesn't quite have the upslope to it yet. There we go. Finally going to get our follow through. Get my trade to break even now. We're 3/4 of the way to the profit objective. And oh, come on. Oh, well, for a second there, I almost thought they were going to turn around one more time. All right, well, see, if you don't jump the gun, if you wait for the signal, look at that. All right, gang, I gotta close up the room here this morning. I hope you found that helpful. And please, if you have questions, ask. I can't make you ask. But if you're sitting there scratching your head, you don't know what's going on, you paid money for this, you paid money to learn how to use this, ask. All right, I'll get off my soapbox now. If you're going to hang out here a little bit longer, I still believe the market owes me another push higher. I can't believe the buyers would walk away after a fairly decent rally out of the gate. And you can see we're almost back to where we started the day, or certainly near the low of the morning. So this is where the buyers picked it up from last time. I would look for a possible test of the extreme, evidence that the market may try to go higher, but right now we're really quite constipated, just going over the same numbers. And on that note, I'll see you tomorrow. Bye for now.